You may fall under this category. Most cryptocurrency traders have a really difficult time making money from the crypto market while prices are falling. And this is normally due to one of three reasons. Reason number one, you may not be patient enough to wait for that perfect trading opportunity. Reason number two, you may be letting your emotions take control while you're in trades. And reason number three is that you may not be quite experienced enough to tackle the beast that is cryptocurrency trading right now. So in this video, what I want to do is help you to identify if you're suffering from one of these three issues and help you fix it. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you're new and click the notification bell, and I'll see you after the intro and disclaimer. Welcome back, and just in case you're brand new, my name is Steven. I've been trading for over a decade, and last month, I actually bought Bitcoin at $20,000. I also explained to everyone that was watching that video that I would be exiting that position and taking profit right below $25,000. Now, I only bring that up because throughout this video, I will be using this trade as context. So if you want to check out the full strategy I used and that entire trade, the link for that video will be in the description and in the top right corner of the screen. If you don't want to look at that, it's totally fine. Here's how that trade played out. I bought in right there. Prices then played around for a long time before finally hitting my target very recently. Now let's discuss issue number one, which is not having the patience to wait for the perfect trading opportunity. It is immensely important while prices are trending lower that you wait for an area that's very likely to provide a bounce out of price. So this is what happens in a downtrend in any market. It doesn't have to be cryptocurrency, but essentially in any market when prices are moving lower, they have a big move down, a little pullback. A move down, possibly a bigger pullback. Move down, pullback, move down, pullback is kind of how a downtrend happens in any market. Now, there is a way that we can identify the highest likelihood of this bounce, of this pullback, and that way is by looking for major levels of structure looking left. So an area that has been used by price as support or resistance in a major way is the most likely area for price to bounce from. Hopefully that makes sense. And what the problem is if you're not patient, and what I see a lot out of traders that are losing money while the prices of crypto are falling, is that lack of patience. Let's say we have price and price does this, and then we have prices pushing lower. And again, we have these pullbacks. What happens a lot of the time is that traders are just jumping in randomly, hoping to find a reversal, or jumping in at the top of these pullbacks out of FOMO, thinking again, oh, this is the reversal, I don't want to miss it. Instead of being patient and waiting for prices to get to a major level of structure that have the highest likelihood of providing a major bounce. And that lack of patience can cause a ton of losing trades. So let's hop over to the trade that I took and let me explain what I was looking at and how I practiced patience before entering into this trade. So as you can see, I have a little zone here between 19,398 and 18,251. If we scroll left and look for that major level of structure, you can see that this is the exact area back in December of 2018 that the price of Bitcoin had a major move from. So whether this area is resistance like this, or whether it would be support like that, is irrelevant. What we're looking for is an area in price where the price of an asset, such as Bitcoin, had a heavy reaction from. In this case, that's that zone I have drawn out here. So I practiced patience by waiting for the price of Bitcoin to get in that zone instead of doing what a lot of beginners do and just buying randomly, hoping that it's the bottom, or buying at the top of pullbacks. As you can see, this is near the bottom of our low before the actual pullback took off. So you don't want to be buying at the very top of a pullback. That's a recipe for disaster. You definitely want to be patient enough to wait for price to get to what we consider a major level of structure, an area where the price has a high likelihood of bouncing. And even after that, it's not like I just buy randomly because price is in a major level that's been used as support or resistance in the past in a major way. That would also be a recipe for disaster. Instead, what I do is wait for price to get in this area, and then I wait for some type of chart pattern that's time tested and proven to be profitable. In this case, it was an ascending wedge pattern, which ended up working out well. As you can see, I did in fact take profits right here before the $25,000 mark. And one of the reasons this trade played out so well is because I was patient enough to wait for price to get to an area that was very likely to provide a bounce. And I was also patient enough to wait for a time-tested, proven to be profitable chart pattern. Now, this did not have to be an ascending wedge. I could have entered on something like a double bottom in this area, or even something like a head and shoulders pattern. Those are the 3 time-tested patterns that I normally use in these areas. But again, I only use those patterns in areas that are very likely to provide a bounce by looking left and finding those major areas of structure. So if you find yourself just buying randomly as price heads lower, then it's very likely that you're suffering from that first problem, which is not being patient and not waiting for price to get to an area that's very likely to provide a bounce. The way you solve that is by looking left, finding those major areas of structure, and only trading in those areas. And also, would probably be a good idea to wait for specific chart patterns in those areas as well. This is not something you have to do on a daily chart. I'm a swing trader, so I tend to take my trades on the daily or 4-hour charts, but you could even do this on lower time frames. Let's go down to the 1 hour and we'll take a look at price here. On the 1 hour chart, what's happening? Are we in an uptrend or a downtrend? Well, prices are obviously falling here on this 1 hour chart. And if we look left on the 1 hour chart, do you see anywhere that moved price dramatically? Hopefully you were able to spot this level right here. We have a major level of support right here. So what would be the next steps? Next steps would just be to create a zone here where that major support level is. And we would wait for price to get into this zone, which it already has, and create some type of chart pattern. If I was a day trader, this may be a trade that I take. We have been patient, waiting for price to get to a major level of structure support. We now can see a price pattern forming here as we have a double bottom on Bitcoin. With this being the case, again, if I was day trading on Bitcoin right now, it's Saturday, so I'm not placing this trade, but if I was day trading Bitcoin right now, I may do something like this with a pretty small stop loss and looking for something like a 2-to-1 reward to risk ratio, as long as we don't have a level of structure in the way. And in this case, we do not have a level of structure in the way. Now, again, these trades are meant to capture bounces. What do I mean by that? We're not looking at this level and going, oh yeah, finally, here's going to be the complete reversal. Bitcoin's going to the moon now. That's not what we're looking for. What I'm looking for in these instances is these areas of major structure, like we can see right here, to provide the pullback, then the continuation of the downtrend. But as cryptos are falling, trading this counter trend strategy is something that's provided me with a lot of profit. So again, you can use this on multiple time frames. You can use this on different markets, not just cryptocurrency. But rule number 1, always stay patient. And if you're trading counter trend, meaning prices are falling, you're looking to buy, always wait until the odds are in your favor by finding levels of structure, prices used as a major level of structure in the past. So that's how to identify if you're having a problem with patience and how to fix it if you are. Let's move on to problem number 2. So the second common problem is letting your emotions take control once you're in a trade. And to give you an example of that, we actually placed this trade right here on the 4-hour chart. As you can see, price played around a lot before eventually actually hitting the target we had in place. Anytime you're placing a counter trend trade, it is extremely important that you have a stop loss, or at least an area where you know, hey, I'm wrong. My analysis was not correct, and I want to get out and accept my losses. You also want to have an area where you go, hey, I was right. My analysis was correct and price did exactly what I thought it was going to do. So now I'm going to get out and I'm going to take my profits. I'm going to assume that you have these two things in check while I continue this part of the lesson. If you don't, then be sure to start learning more and applying stop losses and targets to your counter trend trades, because they're very important. But what tends to happen sometimes whenever we get into trades is that the trade may push up, then push down and get close to our stop loss, then push up and get close to our target, then push down, get close to our stop, so on and so forth. It is very rare that we enter a counter trend trade, price just immediately pushes up, and then we hit our target. That is not a very common scenario. So what happens is traders tend to get very emotional when prices go up, put them in profit, then go down. And those emotions may cause them to do something like move their stop loss from where it is initially down even lower, thinking, oh, I don't want to be stopped out and actually lose money on this trade. I have to move my stop lower, which causes what? If price continues falling, that causes a larger loss. So that's definitely not something you want to do. And that would be an example of letting your emotions take control while you're in a trade. Another example of that would be, oh man, we got really close to my target right here. I'm just going to take off the target. I know I said that I was safe up to this area. I know I said I wanted to take my targets off up here at around a 2.3 to 1 reward to risk ratio, but I'm at a 2 to 1. I'm just going to take my targets off. That would be an example of letting emotions take control while you're in a trade, and something we do not want to do. So if you are suffering from either of those, if you're constantly moving your stop loss or moving your target and you're really uncomfortable while you're in trades and they're going back and forth, then you're likely suffering from becoming emotional while you're in trades. And as I just said, it is very uncommon that a trade just takes off and immediately hits your target. So you must become comfortable with prices after you enter a trade bouncing around a bit before they either hit your target or hit your stop loss. How do we fix this issue? How do you become more comfortable? Well, one of the main ways to do this is by lowering your risk on that trade. The reason those emotions take control is because you're probably risking way too much of your hard-earned money on one specific trade. And so whenever you see that hard-earned money start to lose, you don't want to actually accept the loss. So you continue pushing your stop loss lower. Whereas if you were risking less of your hard-earned money, this loss would not hurt as bad. To give you an example of this, if you have a $10,000 account, let's say, and this loss is equal to $1,000, that's going to sting pretty hard in your $10,000 account. Now, what I want you to do is imagine instead of this loss meaning 1K, which makes it very likely that you're going to try to move this stop loss down as prices go lower. What if you were only risking $100 out of that $10,000 account? You'd be a lot more accepting and a lot less emotional of this loss. See, as traders, we trade based on statistic advantages. We don't know what price is going to do. So for example, the trade you see on the screen is based on a strategy you can learn by checking out that video that I posted in the top right and in the description. But this strategy normally gives me a 40% chance of winning, meaning I lose somewhere around 6 out of 10 trades. So I need that stop loss to be small enough for me to be comfortable losing those 6 out of 10 trades. So that stop loss may be something like 2% of my overall account value. If this stop loss was set to 10% of my account value and I lost 6 out of 10 trades, what if those 6 losses came in a row and I had a 60% drawdown? That would be terrible, right? But what I can do is control my emotions by taking that risk and making it less. And that way I give my strategy time for the edge that I have to play out. Again, 40% accuracy. If I'm risking around 2% per trade and I'm making around 2.5 to 1 reward to risk ratio on each trade, let me show you what that turns into over time. Over time, if I can stay comfortable, because that emotional distress is going to cause you to either blow your account or completely stop trading. So you must take control of your emotions, and this is how we do it. But if I can continue trading by controlling those emotions and not blowing my account, and I win 40 out of 100 trades, I do that with a 2.5 to 1 reward to risk ratio. And then I lose the other 60 trades. I have what we call 40R, which is 40 times my risk. Remember, I'm risking 2% per trade. That means out of the next 100 trades, statistically, I should make around an 80% ROI by doing this over and over. And the way we can continue doing this over and over by completely annihilating the emotional distress that you're in while you're in trades is by reducing your risk per trade. So if you're suffering from becoming way too emotional while you're in trades, this is the number one reason that happens, is because you're risking too much. And the way to fix that is to reduce the risk you have when you place trades. The third most common reason for cryptocurrency traders losing money right now is because of a lack of understanding what trading really is, a lack of understanding of technical analysis, a lack of understanding of trading psychology and discipline, or a lack of understanding of risk management can absolutely cause someone to blow their account or consistently lose money. And don't worry, it's not necessarily your fault. Cryptocurrency has become a very popular place for beginner traders to come to try to get rich quick. It's not like you're alone. Whenever I first started trading, I started well before I was educated enough to actually trade. And it was a reason that I lost a lot of money at the beginning of my trading career. And it is absolutely one of the most common reasons that traders end up blowing their accounts or consistently losing money in any market, not just crypto. So look, I completely understand that you came to crypto or any other market because your goal is to make money. But every person you see that is making money, maybe on YouTube, Instagram, wherever it is, if they're actually making money as traders, then I can guarantee you they spent a lot of time perfecting the craft of trading before they were able to do that, which ironically is the exact path that I believe you should take as well, is learn all you can before you jump into the crypto market. Be sure that you can have a complete understanding of how to identify trends. If you don't, you probably shouldn't be trading with real money. Be sure to have a complete understanding of how to spot major levels of structure. If you don't, you probably shouldn't be trading with real money. Be sure to understand risk management. Be sure to understand double bottoms, head and shoulder patterns. Understand how to spot chart patterns. Understand how to use a stop loss and a target before you actually risk your hard-earned money. Otherwise, you're setting yourself up for absolute failure in the crypto space. So in order to identify if you're someone that may need to go back to the drawing board and get a little more education before diving into placing trades with real money in the cryptocurrency market, just ask yourself, do you understand what trading really is? Which is not knowing exactly what's about to happen in the market. That's not why I make money as a trader whenever I trade in crypto. It's not why anyone makes money. They don't make money because they know what's going to happen. Trading is about finding a specific rules-based strategy that you can place and trade over and over based on a set of rules, and these rules need to give you a statistic edge that plays out over a long period of time. As we discussed a little bit earlier in the lesson, 40% chance to win, 2.5 to 1 reward to risk ratio over a long period of time gives an 80% ROI with a 2% risk. That is what we use as a statistic advantage. The way we create that statistic advantage is by understanding major levels of structure that the market is likely to bounce from. Understanding time-tested chart patterns like ascending wedges, double bottoms, double tops, a head and shoulders pattern. Understanding how to place a stop and target correctly in order to combine to give us that advantage over time. That statistic advantage is what makes us money, not knowing what the market's going to do. So be sure to understand that before you start placing trades with live money. Be sure you have a good handle on technical analysis and stops, targets, risk management, trading psychology, and discipline. Until you are a master of all of those, in my opinion, it is a mistake for you to be placing trades with real money. This is the exact advice I would go back and tell myself at the beginning of my trading career to avoid a ton of losses that I had. So again, don't feel bad if that's where you're at, but just understand that you need to be properly educated before diving into a market as volatile as crypto. And now what I want to do is actually break down Bitcoin right now and tell you guys what I'm waiting on before placing my next trades on Bitcoin. So in terms of swing trades, obviously I have long-term investment accounts that I have Bitcoin and Ethereum in that I just dollar cost average, which means I buy about once a week. I just buy a certain amount of it. But in terms of just swing trading, here's what I'm looking out for next. Let's actually just delete all the analysis on the screen so far. And what is price doing right now? This is what we consider a period of consolidation during a downtrend. So we have our downtrend. Price is obviously creating new lower lows compared to the previous low, and new lower high here is possible, right? We have a lower high compared to the previous high. This could in fact be our next lower high before the continuation down and break below this area. Do you think that right now we should place a short trade because of that? Hopefully you said no. There's no reason right now, for me at least, to place a trade in either direction. We talked about patience before. Patience is what you need to practice in order to be good at trading, good enough to actually make money. So in terms of patience, there's two things I'm waiting for. Price is going to do one of two things, right? It's either going to go up or down. Let's discuss the scenario that's most likely, which is price goes down. You may be asking, Stephen, why is that the most likely scenario? Because we're currently in a downtrend, and when we're in a downtrend, the most likely scenario is that we create a new lower low. If that happens, what I'm going to be doing again, practicing patience, is I'll be waiting for price to break below our previous lows. Then I'll be looking down and to the left for the next major structure level. The same way I had a zone right here at the beginning of the video is exactly what I'm going to be looking for to the left. So let's put a horizontal line right where this low is. And I know when price breaks below this low, I'll be looking for the next level of major support. So as we break below this area right here, if I look down into the left, what do you see? Where's the next area of major structure that price used in a major way? For me, it's going to be this zone right here between $12,000 and $13,000. The reason is because until then, we just have little minor blips of structure, nothing that dramatically moved the market until this area. So when we get a break below this low at $17,500 or so, what I'll be waiting for is price to get down to this level between 13,317 and 12,456. In between that areas where I'll be looking for possible chart patterns, maybe a double bottom or an ascending wedge in this area for a possible swing trade to the upside to provide a bounce. Remember, I'm not looking for a complete reversal until price shows me it's in a complete reversal. So now that you know what I'm going to be doing if price heads lower, let's talk about what I'll be doing if price heads higher, because that's a possibility too. Price could absolutely go higher from here. What I'll be doing if price goes higher is being patient until we break above this high. That gives me more confirmation that this could be a complete reversal. If we have Bitcoin coming up and breaking through 25,000 and breaking through this resistance, that's a better confirmation of a reversal than this initial pullback we've seen. With that better confirmation of a reversal, I would personally be interested in buy trades from the $25,000 zone. This zone right here is what I would be looking for in terms of if price breaks above this high and we get a pullback into this zone. That's where I would then be looking for chart patterns to get involved in the long direction or in possible buy trades out of Bitcoin. So those are the two things that I'm looking for. Again, practicing that patience instead of just buying or selling right now, thinking FOMO, oh no, what if this is when price goes lower? Or oh no, what if $20,000 pushes Bitcoin to the moon? Instead of that, I'll be practicing patience and practicing it by waiting for price to do one of two things: break above these highs, pull back, provide long opportunities, or break below the previous lower low and get all the way down to our buy zone area for possible long trades as well. So that's how I'm looking to buy Bitcoin. That's the three most common mistakes most cryptocurrency traders are making and the reasons that they are, in fact, losing money. Hopefully, if you fell under any of those categories, this video gave you the ability to identify it and hopefully fix it in your own trading. With that said, if you're interested in some more advanced training from yours truly, then we do have the TTC Forex Universities linked in the description as the top link. And you go to www.ttcfxuniversity.com to learn more about that. If not, totally fine too. Be sure you're subscribed here. Be sure you click that like button. If you made it to the end, leave me a comment. Also comment below if you want to see more crypto content from us. And I will talk to you in the next video. See you soon.